I'm Stacy Dempsey with Dempsey Weiss and Associates Insurance. And September is Life Insurance Awareness Month, and I have with me today Jack Dempsey, who has been an insurance agent for almost 40 years, and he's going to answer a few questions today that he gets most from his clients. So Jack, what are the benefits for starting a permanent life insurance policy at a young age?
There's, again, really a couple of compelling reasons for starting at a young age. And let me just back up real quick, because one of the things that we're seeing people who, remember, permanent life insurance is life insurance that you're going to have forever. But we see a lot of people buying term insurance at young ages because they're making the decision based on the premium. The premiums are much lower on term insurance. But what we're finding is those policies are running out or coming to the end of their term when people are in their 40s, maybe 50s. And now they're looking at permanent life insurance because they don't want that to happen again. And they're 20 years older or 25 years older, and the premiums are much higher. So, when you get into, say, a permanent life insurance policy in your 20s, 30s, the premium outlay is going to be more than term insurance, certainly. But you're also not only have life insurance forever, but you're going to build cash value that, can be used, for different things down the road. You might be building a cash value, and 20 years down the road, you might have your own kids starting college. And now you've got a pool of money that can maybe be used to help with that. There's multiple uses of that money throughout life. But if you never touch it, and then continue to fund that policy, say to whatever retirement age is going to be for a 25 or 30-year-old down the road, we'll just say age 70. Well, now you've built up a substantial amount of money inside these policies that can be a supplement to your retirement by taking income out. And the nice thing about it is that you can take it out without forfeiting your life insurance. You can still have life insurance while you're making some withdrawals from that policy for your retirement. The other thing, starting young, that really that's a great benefit is there's policies today. We can structure them to where as your cash value grows, the money you're putting in building a cash value, as it grows, it can be added to your death benefit. So you actually have a growing death benefit. So as an example, you have a policy for 20 years, you have, a $75,000 cash value in it. And we'll just say hypothetically, it's a $500,000 policy. Well, if something happens to you, you might only get 500,000. Where here, because you're starting young, you would get the 500 plus the 75,000. So you would get both. And so by having that feature, it naturally gives that policy what we would call a hedge against inflation, to where it's growing because the cash value is growing, just because inflation does erode over time the purchasing power of your death benefit. So it does give you an increasing death benefit. Plus the premiums are lower, you're healthy, you can possibly get preferred ratings. There's just multiple reasons why. And the last one I'll say real quickly is that plus you get these premiums built into your budget at a young age, and because then you make other financial decisions down the road, around that money already being earmarked, rather than making those other decisions and now all of a sudden you want to buy permanent life insurance and that premium's tougher to afford because you made these other financial decisions along the way that really crimps your budget. So getting that built into your budget at a young age is a great move. We highly recommend the 20 and 30-year-olds consider permanent life insurance.